Mindy Strong. Today I'm going to share with you all the information you need to know for the Series 65 in the Uniform Securities Act, which is the state act registration and licensing section. This is going to help solidify the information you learned in other programs. So this is not to be used instead of using any of those great online programs, but to help you out in addition to. Here we go. First of all, there are state blue sky laws. These are to protect people against selling a part of the blue sky. So these are state laws to protect people. I want to let you guys know before I go any further, this is a huge part of the Series 65. This section right here covers about 10 questions on the Series 65. So I'm going to try to really go into detail. This is probably going to be a bit of a longer video. I think I have 27 slides. So this is something you should focus on. And unfortunately, as opposed to a lot of the videos where we look at the concepts and we understand the concepts, this is going to involve memorization. However, I do want to say the big concept to remember here is that these state laws are to protect everybody and to keep things from being duplicated and to keep people from getting through the cracks. Okay, so there are times in which someone doesn't have to register with the state, and there are times in which they do, and we're going to look into those in more detail. Here we go. National Securities Market Improvement Act was created to eliminate duplicate registrations at the state and the national levels, which is what I just said. Remember this: federal law trumps state law regarding net capital rules, custody rules, margin rules, financial responsibility rules, and record-keeping rules. Federal law trumps state rules. Got it. Moving on. The definition of a person is not just a flesh and blood human being. A person may issue or trade securities. A person can be defined as an individual, a corporation, partnership, business trusts, estates, trusts, associations, joint stock companies, joint ventures, government and political subdivisions of governments, or unincorporated organizations. Breathe. Lots of different entities can be considered to be a person. An issuer is any person, we just defined who a person is, who issues or proposes to issue a security. So an issuer for a trust would be any trust, and the person performing the function as the manager when there's no board of directors. When I say any trust, I mean like collateral trusts incorporated into that, okay? An issuer for specifically an equipment trust is a person the equipment is leased or sold to, which could be the corporation. The trustee holds on to that trust until all the payments have been made. Makes sense. It's just like when you purchase a car. Until you've made all your payments, you don't actually have the title. Okay. Fractional interest in oil or gas. This one is looked at differently. There has been a lot of funny business and schemes involving oil and gas, so there is no issuer here. They must undergo stringent rules and they must go through registration by qualification. So it's harder in this case, and that's to protect people because of previous scams. Okay, an issuer transaction is when an issuer, who we just talked about, sells or redeems a security. And the issuer receives the proceeds of the sale. That's all part of the definition. Primary takes place in the primary market. So this is like an initial offering. Okay, non-issuer. So we know what an issuer is. A non-issuer is a person that is, ready, not defined as an issuer. An example would be someone who purchases purchases a security from an issuer and resells it. And I should have said it instead of them in case you're the grammar police. I caught it before you. A non-issuer transaction is when the issuer does not receive the proceeds from the sale. Why are we going over this when it seems obvious? Because these definitions are going to be, these phrases and words are going to be in the questions, and you need to know what is being asked. So you need to understand what a non-issuer transaction is in order to answer the question. So if you love words and vocabulary, this section's for you. Non-issuer transactions are secondary transactions because they take place in the secondary or trading market. Okay? Stay with me. We got this. Here are some definitions. A dealer is the principal in the transaction. Who's in charge when you go to the casino and you go to the roulette table? The dealer's in charge. You go to play blackjack, the dealer is in charge. The agent is the middleman or the broker or the salesman. Lots of vocabulary on this test, so we just know that the agent is the middleman or the broker or the salesman, all the same person, whereas the dealer is the principal in the transaction. Now, we're going to discuss institutional buyers. This section is all about who needs to register in the state and who doesn't. And this is huge, so I'm going to go through it. This is where we really have to just memorize the laws. But once you do memorize them and you know it, boom, you got this section, and it's a big part of the test, so take your time on this. Okay, broker-dealers and investment advisors have both. This is where they're alike. There's no need for them to register if they do not have an office in the state, and, not or, and only institutional buyers are solicited. That's an and. Why? Because these laws, these registration laws, are meant to protect people so that not everybody can be a broker dealer or an investment advisor, and that the humans, the people, the smaller people are protected. So in this case, if they're dealing with institutional buyers, think of these as fancies. Think of these as people that, or persons that don't have to be protected. They're already protected. So this includes banks, savings and loans, trust companies, insurance companies, investment companies, pension and profit sharing plans, and anyone else so designated by the state administrator. State administrator gets to make a bunch of rules. Okay, they're like the principal or the boss of the whole thing. Okay. Now we're going to look into more detail as to what a broker-dealer is. A broker-dealer affects securities transactions for others and his or her own account. They must register in the state unless they're exempt. And we just looked at that. They must register in the state unless they're exempt. Agency capacity. That is when a firm acts as a middleman. Okay, so we have that word middleman. It is acting as an agency. The firm acts as the middleman, so what are they called? If they're the middleman, they're the broker. Okay. Now, principal capacity, when a firm trades out of its own account, they are acting as the dealer. Acting as a broker-dealer, either one, these firms must register in the state because they're acting as a broker or they're acting as a dealer. Got it. Now we have mergers and acquisitions. These advisors and the finders of the mergers and acquisitions, anyone who gives advice on mergers and acquisitions or finds companies to be acquired, is engaging in securities transactions. Therefore, they are considered to be a broker-dealer. These are the definitions for broker-dealer. These are the people that fit under this definition. Now, we're going to look at what isn't a broker-dealer. Okay? If you have another name, then you're not a broker-dealer. If you're an agent and you represent the broker-dealer, if you're an agent, you also might be called a sales representative. You also might be called a registered representative. By definition, you are not a broker-dealer. You represent the broker-dealer. Depository institutions. Depository, that's where the monies are kept. Banks, saving institutions, trust companies, they are not broker-dealers. They're depository institutions. Issuers are also not broker-dealers. We just talked about what issuers are. Firms that only trade with professional investors and have no place of business in the state. So professional investors not dealing with the public, no place of business in the state, out of state. They're not broker-dealers. They don't have to register. And we just saw that. We just read that. So this is no new information. Now, here's a little exception, and this one I'll explain. Firms that contact someone that is already a customer for at least 30 days is on vacation in another state. They're just on vacation in another state. Does this broker-dealer then have to be registered everywhere their people go on vacation in order to help them while they're literally physically in another state? No. As long as they've been their customer for 30 days, that's fine. Okay? Now the same thing with Canada. So there are agents that live in Canada, and if they're Canadian citizens vacation in the United States, they don't have to register in the United States. Okay? They can still do business with their Canadian customers that happen to be in the United States. Got it. Now, an agent that is associated with a broker-dealer who is exempt from the state registration is also exempt from the state registration. So when an agent is associated with a broker-dealer who's exempt from the state registration, then they are also exempt. Now let's look at agents. Okay. Agents are also known as sales representatives. They must register in the state if they represent an issuer or a broker-dealer to effect trades, no matter how they're paid. No matter how they're paid. An individual, not a person, who represents a broker-dealer or an issuer in effecting securities transactions is defined as an agent. An individual who represents a broker-dealer or an issuer in effecting securities transactions is considered an agent. They must register in each state in which they conduct trades. A registered representative is an agent for a broker-dealer. I'm saying this in as many ways as I can. Agents are compensated by salary or commission. Doesn't matter which one. Who's exempt? Clerical employees and managerial employees who do not effect trades aren't agents. That makes sense. They're just working in the office. Okay? They're not effecting trades. Okay. Who else is not an agent? Individuals who represent issuers in the following examples are not agents, and this is where we really look at the difference between our issuers and our broker-dealers. Individuals who represent issuers trading exempt securities don't have to register. Individuals who represent broker-dealers trading exempt securities have to register. And we're talking about exempt securities here. So exempt securities are U.S. government, foreign government, municipal government, Canadian government, bank and savings institutions, trust companies, promissory notes of 9 months or less securities. In these cases, if you are an agent representing an issuer, you don't have to register. If you're an agent that's representing a broker-dealer, you have to register. Okay, let's look further down and we're going to see this continues. Individuals who represent issuers trading exempt transactions. So the security is what we're trading. The exempt transaction is more of a how or who. So we've got what and we have who. So in this case, individuals who represent issuers trading exempt transactions don't have to register. So same thing, issuers up here, exempt securities don't. Issuers, exempt transactions don't. However, individuals who represent broker-dealers trading exempt transactions have to register. Same. Exempt transactions don't involve the public. Okay? Don't involve the public. Examples: isolated transactions between someone other than the issuer, transactions between issuers and underwriters. There's no public involvement. It's called private placement. Transactions with financial or institutional investigators. They're sophisticated, so you don't have to worry about them. This is a huge difference between issuers and broker-dealers and whether or not they have to be registered in the state. There is a lot more flexibility for agents that work with issuers than for agents that work with broker-dealers. Let me say that again. There is a lot more flexibility for agents that work with issuers compared to agents who work for broker-dealers. Okay. Now we're going to move on, and the same concept is going to apply. Individuals who represent issuers trading of some covered securities don't have to register. Individuals who represent broker-dealers trading some covered securities have to register. However, look at this right here, okay? This is huge. Individuals who represent issuers trading federal covered securities must register. I'm going to say that again. Individuals who represent trading federal covered securities must register. Now let's go back and look at some of those exempt covered transactions. Covered transaction, federal private placement under Rule 508. Qualified purchasers, these are people or family companies with over 5 million. They have pre-existing trust for those people and any other person with at least 25 million. And employees of issuers who effect trades only for employees of the issuer do not have to register. The agents for broker-dealers do not get these allowances. Just the agents for the issuers. And this right here is the one exception. Here we go. If you represent issuer trading federal covered securities, yes, you must register. Okay. Whew, that's a lot. Take a break. Pause the video if you need to. Take a breath. Okay, now we're getting closer to who you are going to be when you pass this amazing exam. So now we're talking about the investment advisors. Not you yet, but we're close. We're getting in there. So, what is an investment advisor? An investment advisor gives advice for money, and they must register with the state. They advise others. They give analyses or reports. They provide investment advisory services. That's a pretty straightforward definition. We're not used to those. Here are, of course, some exclusions. And this is really okay? Here we go through these exclusions. You know who's not an investment advisor? An investment advisor representative. Why aren't they? Because they're an investment advisor representative. They're an employee of the investment advisor. Depository institutions are not investment advisors. They're depository institutions. Banks, savings and loans, and trusts. Professionals who incidentally in their job talk about this sort of thing are not considered investment advisors. Broker-dealers that receive no special compensation are not investment advisors. Publishers and columnists who give general investment advice are not investment advisors and therefore don't have to register. And federal covered advisors are not investment advisors they don't have to register at the state because they have to register with the SEC. Remember in the beginning, they talked about not wanting to have to duplicate. There it is. Who is exempt from registering as an investment advisor? Well, if you have no office in the state and less than 5 clients in the state that you, in the last year, in the last 12 months, then de minimis exemption, you qualify. Congratulations. We don't want to waste your time. You have less than 5 clients in that state. You don't have an office in the state. You don't have to register in that state. Okay? Cool. Now let's look at the federal covered advisors. So I just said this, but I'm going to say it again. They must register with the SEC, federal, but not the state. This is who a federal covered advisor is. They have $100 million or more in assets, anywhere from 100 million to 110 million. They get to choose whether they register with the state or all the states, or whether they just go with the SEC. And they can go down to 90 million without having to deregister and then go back to state registration. A mid-sized company with 25 million or more must register with the states unless that state doesn't require it. Then they have to register with the SEC because they have to be looked over, right? Mid-size that has to be registered with 15 states or more, they can choose to make their life easier and just register with the SEC rather than having to register with all 15 states. Anyone excluded from the definition of investment advisor then falls under the category of federal covered advisor. An advisor that's registered to investment companies is considered a federal covered advisor. Now, this is big. We talked about the fact that they don't have to register in each state, but they must file a notice in every state in which they have an office or more than 5 non-institutional investors. So it's kind of like the regular investment advisors have to register in every state in which they have an office or more than 5. Federal covered advisors just have to file a notice. All investment advisors that work with federal covered advisors must register in the state. Okay, and why is that? Well, let's look. If an investment advisor is working with a federal covered advisor, the federal covered advisor has to file a notice in the state, but they don't have to file with the state. They file with the SEC. So the IA has to specifically file with the state so that they're still paid attention to. Okay. Oh my gosh, what are we looking at here? We're about to talk about you. Investment advisor representative. So who is an investment advisor representative? Any partner, officer, director, or other individual employed by the investment advisor who, that was my drum roll, makes recommendations or renders advice, manages accounts or portfolios, determines which advice should be given, solicits or negotiates for the sale, supervises others who perform those tasks, any officer, director, partner who performs any activities above, they have a place of business in the state, and they're employed by the federal covered advisor. That's it. Those are investment advisor representatives. Okay, we're moving on to the registration requirements. This is no more exciting than what we just talked about, but I'm going to try my best to make it entertaining. What are the registration requirements for broker dealers and agents, you ask? I'll tell you. Must register in the state or have an exemption. Duh, we get that. Broker dealers must register with the SEC using Form BD. BD makes sense. They're broker dealers. They use Form BD. Then the broker dealer has to register with the self-regulatory organization, FINRA. Form BD is used to check off the states and the self-regulatory organization. Agents for broker dealers cannot be employed if they're not registered. That is logical. Agents can't be employed with more than one broker dealer at a time. If they are allowed, then the broker dealer must be told. If the agent is no longer employed, it must be reported. The agent must report it. The broker dealer must also report it promptly. And promptly means within 30 days. If the broker dealer itself loses registration, the agent does as well. The agent can be picked up by another broker dealer, but they must register through the broker dealer, not on their own. Okay, moving on. What are the registration requirements for me, you say? The investment advisor representative. I'll tell you. You must register in the state or have an exemption. If you work for an FCA, you must register in the state unless there's no office in the state. If you have an office in the state, what is happening? Or more than 5 non-institutional clients in the state during the last 12 months, you must register in the state. And solicitors for advisors must register in the state. You're welcome. Okay, this is so fun. Registration procedure for agents, broker-dealers, investment advisors, and investment advisor representatives. You have to file a registration application with the state admin. The state administrator becomes the attorney. And there's something called consent to service of process. If a person is sued, the state administrator receives the summons and lets the person being sued know. That is not a phone call you want. Registration information. They want to know the form of business organization, the place of business, qualifications and business history, fingerprints, listing of injections, applicants' financial condition. Investment advisor must provide any other info the client needs to know. It's a lot. Licensing. Okay, of course there's a licensing fee. The broker-dealer, agent, investment advisor representative has to pay the fee. There's an initial notice fee for the FCA. You must pay an annual renewal fee. Registration becomes effective 30 days after. Successor firm doesn't have to pay the new fee if you move to another firm. Registration expires December 31st. If you're an agent for a broker-dealer or an IAR registers with the SEC, then state paperwork requirement is met. That makes sense. FINRA Gateway is used by broker-dealers and their agents to register at the federal level. Investment advisor registration depository is what's used for IAs. Handles state registrations of advisors and federal covered advisors. Notice requirements for federal covered advisors. Registration for investment advisor representatives of federal that have filed notice with the state. Form ADV is used for the SEC or the state. Registration also expires December 31st. You must file any annual updating amendments within 90 days. And then material changes, that's within 90 days of the end of the year. And the material changes within 30 days. Any material changes. Okay, we're almost done. U4 industry application. This creates the FINRA gateway for the agent of the broker-dealer, and it creates the IRAD from the investment advisor representative. Must renew registration with the state within 30 days of renewal date at calendar year end. There should be a space there. U5, termination form. Former employing firm has to file the thing, the termination form, within 30 days of termination. Unless the representative was with the FCA. Then it's the representative's responsibility. Why? Because they're not with the state. The FCA is not with the state, so then it becomes the representative's responsibility. U6, report is for disciplinary action. It has to be filed promptly, which means within 30 days, and then if there are any felonies. Okay, almost done. What are the registration standards? We just talked about the requirements. What are the standards for broker-dealers and investment advisors? Great question. First of all, there is a minimum dollar of net capital, or also known as liquid net worth, and that's this right here. Here's your liquid net worth. Only in principal place of business in the state. All assets minus all liabilities minus intangibles. Personal property is included for the individual. Partnership or corporation deductibles does not include personal property. That makes sense. Surety bond coverage. This is a cash deposit. Surety bond coverage. The state can take it if you violate the law. These requirements can change if the investment advisor takes or doesn't take custody of funds. So this will depend on whether the IA takes custody of funds. You have to pass a qualifying exam, and usually a balance sheet is required, and they'll let you know the next day if you don't qualify, and they'll probably ask for more information. What are the registration standards for agents, you ask? Well, one of those is missing. Do you notice that? They just need the surety bond coverage if you have discretionary power or custody of funds, and you have to pass a qualifying exam. And then you ask, what are the registration standards for me, the IAR? Well, you have to pass a qualifying exam. You guys are the only ones with no surety bond requirement. Exam waiver is available if you're already a CFP or a CFA, and you have to file fingerprints. Requirements for maintaining registration. Well, you have to maintain books and finance records, but federal trumps state, remember that. Broker-dealer records, customer correspondence and emails, keep it for 3 years. Customer trade confirmation, keep it for 3 years. Customer account statements, keep it for 6. Federal covered advisors, keep everything for 5. State registered advisors, they have rules for must be kept, and it is long. Keep everything. Investment advisor records, they have a rule, all must be kept for 5 years, with the first 2 kept at the principal location if you're state registered. Federal covered advisors, keep everything for 5 years. Permanent records, keep through the life of the firm and 3 years after you close. IA records, they have a rule, all must be kept for 5 years, and the investment advisor must give the investment brochure 48 hours before they do business, or they have this period of time after they start to do business that they can cancel and change their mind. That's it, y'all. That was fun, huh? That is looking at the state. Hope this has been helpful. Let me know what you think. 33 minutes of great information. Good luck.